Hello friends, welcome back. The question was posted about taking a larger swings in crude oil, and they wanted some review and commentary on how to use Rankos, how to use the measured move for the crude oil for larger swings, so they can construct the option trades, and they're doing some hedging around it. It was a great question. Keep them coming. 369Forecast at gmail.com. So let's review quickly. And so what we have done is we have two data lines posted here. You can have a look. So one is 19-point Renko, other one is 38-point Renko, and on top of these two lines you don't see the price chart here, they're hidden. So this VWAP and moving averages of VWAP 30, 120, 160. The top one is based on 19-point Renko, bottom one is based on 38-point Renko. We go back and evaluate our recent deflections from the mean in crude oil. I'm giving you an easy way out of tactical swing trading. Just like we find the rising points and falling points from a point of interest using frequencies we have been talking about right here, the frequency bars. Here we are going to do the same thing, but we want to see how far has market moved away from the mean being 120, 160 MAs of the VWAP on 38 Renko, 38-point Renko. Renko charts are time-free charts because all the sideways action is going to be suppressed. You will not even see the move. This is what we need. All right. So you can go back in time and find those few reflection points. Now you guys may or may not be quants, so I'm giving you easy way out how this can be done. This is a representation of quant models represented differently. That's why they will never change and they'll continue to work. VWAP, the whole world knows about it, so it's easy to explain it. So we found this frequency bar, first one, and then we want to see a very big one too, which is right here. Alright, so one is deflections away from here and one is from here. Now we will always assume that these deflection points will continue to work. So this point was the maximum stretch point downwards. So reflection of that will take place. Now we have other secret reflection points which are being taught in the hedge fund classes for people who are engaged in it. So this is easier way out which can be done in public domain. So this big reflection came from here. We can anticipate a similar reflection might come on the other side, and we have done this many times in different ways. So we can set up the anticipation, and then we look at the probability space and say, okay, this guy is sitting on my green level, There's a high probability. If I want to take a short, I take a short here. Then what we do, we also have our master oscillators on 19-point Renko and 38-point Renko, which are also telling us that the high probability both are going to turn down. The data lines are not shown here, they're suppressed. That's why I was trying to tell you earlier that we don't even need to look at the price if your methodology and your models are strong. They will just tell you what's going on. Trading is the last stage. Activation of clicks. Alright, so we got that going very clearly, and we have an idea that most likely we are looking at a swing long. Now swing can mean a few days or a few weeks. Alright, so we got that up right there. Now what else is going on? So you can do the same reflections on any of these two. This is price itself, and they have 22-day range. Moving average is there, so it's based on VWAP, so that should show you the same data mostly. Okay. All right. We can also place this on highs and lows, so we already have learned that. Done differently. Done here, the balance points were these balance points for algos. Here we're doing the same thing, VWAP or tops and bottoms, right? So the same two kind of placements, and then confirmed by the oscillator cycles. If two cycles come together, high probability. For example, right here, we're expecting a long, which got that. Let me put it this way so you can see the price. And just looking at my oscillator without the price, I can tell you this is a break of that is a long potential. This is a short area. This is a long area, right here, boom. This is coming like it's a little bit short, a little bit short came, right, and a little bit short, and then we don't know, so little or big, we just follow it, right? And there we go. And then if we place this on the top of the move, right, this which one is it? Okay, let's move them both. Same ideas, right? Move from the mean and move from the top, and we are doing some anticipation that hey, market should at least go here before I even look into looking at anything, right? So I just put it on the top, put it on this moving average, and say okay, this seems to be an area of interest. Then what do I do after that? I look at my oscillator, the bigger cycles, right? Cycles, and then they're both on the bottom side. There's high probability, and I'm also doing some other reflection points. So what do we get? We can do the same thing here using the frequency targets as well, but there we go. So there we are, and on this time frame oscillator is ready as well. Okay, so there's a high probability that I want to go long here, and it seemed to have given us the profits we seek. Okay, now based on our information, VWAP is below the moving averages. All the moving averages have moved down, so 33 is below 120 and 160. We have a base down, so trend has actually come down. The market came back to retest the VWAP. That's what happened here. And then again impulses, right? So just keep your impulses against, we came with the trend definition, impulses. Okay, impulses, right? Anti-impulse and impulse. Okay. How did we jump from there to there? Let me squeeze it a bit. Okay, I think we already had that, sorry. This was the initial measurement and it got reflected here. Okay, and then we are getting another reflection potentially coming up here, right? So these impulse, this was again the long, right here was a long, right? Now these are like quite a bit of moves per contract. $3,000-4,000 moves up, $3,000-4,000 moves down. So this was a good impulse from here to here, retest, a fresh resetting of the trend in the downward direction, pullback. Oscillators are telling us to potentially go short. And then what we can also do is it can continue to go on in its own merry path. We wait for the trend line break. Wait for trend line break, right? We wait for trend line break, aggressive trend lines. On the downside too, break off trend line breaks. Now this trend line breaks can do our projections. You guys are not aware of it, how the banks do it. People in hedge fund trading, they know where market is going exactly all the time, all these pivots. But anyways, with this basic information itself, we know reflection is coming. Wait for trend line break. Oscillator is ready. He's telling us, first it is telling us a lot of pressure. It will try one time, second time, and third time it will go, because this oscillator is designed that way. First it will detect the pressure is on, then it will attempt to release the pressure one time, second time, third time is a go. First time, second time, third time is a go. First time, second time, third time is a go, right? So based on statistics, again, it's all built on statistics. So here we are. So this is how I would answer your question, that continue this basic phenomena of measured move and combine that with, as you can see here, so we didn't go back. Let's assume the world started at this point and we got this measured move and we are tracking this right here, right? And we want to go long. It has gone past our initial impulse, which we don't know will happen, right? This is why we need to protect ourselves with trend line break at least. There are always 3 trend lines. These trend line breaks have projected this. This trend line break will project this top. That is what our great warrior has posted about, what, 450, 540, right? What that is a magic. But trend line is good starting point. So this trend line break happened. Oscillator was saying we want to go up, let it break and go up. It came back. Now this is part of the banking bars. We cannot disclose, but this is a genetic banking bar DNA. So there is entry. These are entry points in the direction of the trend. These are the entry point in the direction of the banking bar trend. So we know how to capture this. Blank chart, don't need anything. Blank chart alone can be traded to just perfection. All right, but so I would suggest, since you don't know any of those things, just use this. Impulsive moves, trend line breaks, and use some oscillator of interest. And multi-time frame has been implemented with 2 higher dimension time frames. So where are we right now? If market is going down, it can come down to 65. If it is done going down, I want trend line to break. Help me go on the other side. Now this oscillator has pulled down the market. It is ready to come down and ready to cycle up. So it may come back to retest this, break the trend line and go up. So right now we were able to catch this top, we were able to catch this bottom, we were able to do a genetic DNA entry here again, right there. So people who are aware of that, you can see the genetic banking bar entries, just like these ones here. Here the short entry DNA is right there. Short entry DNA is right there, which is also the break confirmation of the trend line. So there are there are 6 models in level 1 we need to master, and you can just rule the market. So there it is. Right now this is in the middle. If it goes down, it will become interesting. If it breaks tomorrow, it will gonna break the trend. Now what is and where is the trend? Trend is down. Why? Based on our trend rules. Trend has been down since this day at 71. From this point we are officially trend down mode because of the definition of VWAP and moving average. It's in the downward. How about this double time frame? 39 Ranko, same thing. At this point, a little delayed, trend is officially down, right? There we go. And then this impulses, get your impulses going. Impulses, this is impulse, right? Anti-impulse, oh, this is another impulse. Impulse up, impulse up. So you have, I hope you are getting time to watch all those videos we have been posting. This is also impulse, right? This is impulse, a different kind of impulse. This is how far we have gone away from the mean impulse, which is going to get reflected on the other side, right? Reflections. You can right click and clone it. You can also use your shift model on this as well. You can create a shift model on this itself without the price. This is oscillator, right? Nobody is stopping us doing anything as long as you follow the rules. And we curve fit it, right? So there we go. We are extending. Just if I just do ABC, we are out of bounds, coming back to the mean. So what is the mean? The white line is the mean. Out of bound to the mean. Now we can make it better by curve fitting it. Right now, this is the channel which is going on. So there's nobody stopping us to use channels on the indicator itself. Right? Get creative. All right. So this was reflected here. Now we have impulses. So now we can have a bigger impulse. So let's create this impulse height. Where does that go? It went from here. It went right here to the bottom. Then to enter, either use trend line, break, which we posted on the top, or use the people who are in hedge fund. They will be using something else. They will be using banking bar model, and they will enter right here. You can also try this model, right? So there we go. So where did this come from? Clone it, correct? Then you know it came from somewhere. It came from here. Boom. The way we showed you on this cosmic various ABCs, channels, and the timers, we've covered quite a bit. This impulse is right here, correct? This impulse is right there. This is coming off VWAP average. This is coming from the actual price ranges. This is almost same as this. So okay, so we got one impulse, we got a second impulse. So two impulses, you track it just like we are tracking the frequencies. Right here is that impulse. So we can just color them too, so you can track them. So we can say these are all related. So track those impulses. Track those impulses. That's what we do one-on-one. We look at your problems, we fix the problems, but in context of there are 10 layers and levels of training. First level is 6 modules itself. Takes 3 to 6 months, and it takes 2 months to really flip your trading, right? This is all just basics. It's not even in the modules, right? It starts, we assume that you know all this, and we start from there. Genetics, trade entry, perfection. Week by week, track your trades one-on-one. There's no random wannabe traders. Either you win or you lose in this game. Alright, this is where it is. This is a rich man's sport. You better get better with your controls. Alright, we can see all the book on both sides, right? You cannot. So be cautious. So I would say this is not a rocket science, right? What we are doing is science, and it's a smart science, and then you do your breakouts and oscillators. This one gives you a context. So now I have the probability it went here, popped up, right? So what I can do now, if this is the top, probability is going down here. I have 2 trackers now, right? So let's see if market can come down here, and if it does, this trend line has to break on the other side to enter long. It is restructuring in that fashion. You can have any moment. right? But if you are a savvy trader, you can skip the trades if that doesn't meet your criteria. Like this guy has been impulsing for a while, and this guy came here, you got this in, right? All right. Now you made up your mind and say, okay, I will either go, let's say I'm going to track this impulse, right? So you're expecting at least retest of this guy, and probably what they do is typically push it forward, trap people on the wrong side, and take off. If it gets here, you make a decision. Market will somewhere be here. Then you use a banking bar, entry, and scale in for huge profits. $50,000 a month you can do with crude oil alone if you know what you're doing. Thank you very much. I hope I was able to shed some light so you can restructure your thoughts a little bit effectively. Thank you very much.